Okay, very good evening here on the 6th of July 2018. It is the weekly market roundup. Very warm welcome in to this market roundup, which of course we do run on a weekly basis at the end of every week. Just reconcile the trades that have been taken for the week so far. So by way of the live trading room, which is the one I normally like to start with, we can see that today, this week itself, banked on the 4th of July was the dollar Japanese yen trade opportunity. That was run on the liftoff 3.0 trading model, and you can see that we did exit that on a trailing stop for 0.33% profit. Small profit, but of course the trailing stop loss prevented us from taking a loss on that one just there. Dollar Japanese yen, which is superb. It didn't quite move the way we had anticipated. Let's take a look at it at the moment. And if you look at it right now, we did enter the market on this one on the high, in fact, of this particular bar. Was it the high? I do believe it was not. No, actually, my apologies for that. It was actually the close. And the reason we entered on the close, of course, is because the English channel setup does exist just before that. And for that reason, we entered on the close. And we can verify this, of course, because it's in the journal. You can see 110.11 is the close. Where was our entry into the trade? 110.14, exactly correct with spread. So we were into the trade at 110.14 just there. My stop goes on the low, of course, of the prime -1, which is this particular point here. If you're not familiar with prime -1s, PSWBs, IB turning points, we have made a YouTube video on our channel, which you can, of course, review, get an understanding of the different types of turning points in the market. Very powerful video. We'll be going into a lot more depth, actually, on our Traders Toolbox course, which is taking place tomorrow over the weekend. Advanced course for students who are looking to construct trading strategies and systems. So we'll certainly be doing that over the weekend. Let's also move on to just understand the trade. So we did get into the trade. We were taken out on this outsider bar just here. We closed the trade on the close of this just here at this time. So we were out the market after the close of that outside bar just there. And then you can see not much has happened since that point at this time. So not really too much there on the dollar Japanese yen. We banked a small profit from this distance here to this one. And of course that is logged on a transparent trade journal. 0.33% profit, taking the liftoff system to 3.49% profit. Sorry, the liftoff cash to 3.49% profit, taking our overall performance in the live trading room, you can see just here, to 13.9% cash for the year so far, 9.99% on the system curve just there. You can see that as the way that's compiled up, and of course if you look at the two curves, the cash against the system, you can see currently the cash curve slightly outbeating the system curve at this time. No doubt over time those two will come closer together. So let's go on to the live trading room. In the elite trading room this week, no trade opportunities. Don't forget, the elite trading room doesn't necessarily have a huge amount of frequency behind it, but picks out much more quality setups, very high reward risk. So we're looking for things that can range anything between 2 to 1 to 14, 15, 16 to 1. Reward risk opportunities on various trades, actually just there, using the systems for prime profits, for certainly gold bars. Trades like that can have quite a high reward risk ratio behind them. So we are looking for those particular opportunities. Nothing for us on the elite room this particular week, and that's okay. That allows us then to go on to the topic of the week here in the market update. So aside from that dollar yen trade, we banked just under £200. Let's have a look at the exact amount was. You can see here £189.19 banked onto that account. And then you can see the profit of the liftoff account now currently up £3,026.47. For those of you that have been tuning into the market updates for a while now, you'll know that that account has grown steadily from £25,000 to where it is now at £28,000.26. So very good upside on that one. I believe we can work out actually the exact percentage as well, which I'd be keen to do. 3,026 divided by the total was available at the time. 12% up the liftoff cash account. There you can see it just there in real time. That's taken place over a period of 1 year. And of course the full summary is available on that as well. These are shortly to be published all on our website as well, so you'll be able to see all the transparent journals, the transparent account statements. You'll be able to download them all as well, so you can verify the results as well if you should wish to do that. This is the Master the Market, so welcome in. We're going to run a topic now, and the topic that I've picked out for the week today is the ATR, the ATR 10. So how can we use the ATR 10? Two different ways in which we can use it. It's a very useful tool, and at Master the Markets we use the ATR for different elements of the trading system. So the first one that we do, of course, is we use it to assess trade risk. So how can we use ATR for trade risk? So let's go across to a chart. Okay, so this is a chart of the Aussie against the US dollar. So you can see we are currently with two failed price setups here on this Aussie US dollar. For those of you on the live trade Mentorship Advanced Vedanta Elite, you will understand that primary failures are a good thing for us because we're looking for turning points in the market, and the more of them we get, the higher the probability of the turning point occurring. So of course the English channel setups here on the Aussie dollar, you'll see the first one was just here. This is the first failure. This bar has failed, that particular bar just there. And then of course the failed primary IB as well, where we had an IB set up. You saw the breakout. There's the failed pri IB just there as well. So two failures at this time, giving the Aussie dollar pretty strong upside potential to reverse and turn. And of course in the Vedanta Elite space we have all the statistics compiled, and we can tell you exactly that there's a 76% chance that the third primary will confirm, etc., etc. So this is important to know. But if we want to get involved in the trade, we need to use the ATR. How do we use that? Well, if we want to enter the bar, we want to enter the chart on the breakout, let's say, of this particular seller bar just here, we want to put an entry on the high. Let's say that this was inside of our strategy parameters. Let's say the entry was on the high plus 5 pips, for example. So the high is 7406, the low is 7310. So let's say I wanted to enter on the high. 7406 is the high, so 7412 would be the entry just there. Where would my stop go? It would go on the low of this bar. 7310 the low, so 7308. This is not an exact strategy, by the way. I'm just giving you some numbers for the purpose of the example. 7308 the stop. So now we are 2 pips below the low stop, 5 pips above the high entry. If I look at the number of pips of trade risk, you'll see that it is 104. So here's a question for you. Is 104 pips of trade risk too much? The answer could be yes, or it could be no. But again, it depends on what your maximum risk criteria are. So in the live trading room, we have a certain amount of risk that we take per trade. So for example, let's say for example the risk parameter was 2.5 ATR 10, right? That's quite large, and the actual parameter is smaller. But let's say for example you use 2.5, or let's say you use 2. For example, 2 times ATR. So then what you could do to assess if this is too high a risk in terms of pips or not, we use the ATR. So we can see very quickly here, the ATR on this particular day was 62 pips. If I multiply 62 by 2, I get to 124. So 124 pips of trade risk would be 2 ATR. Is this 115 pips less than or more than that 124? And you can see that it's 105 pips of trade risk actually, and that 105 pips of trade risk is less than 124, which means that if I were using a variable of 2 ATR 10 for maximum risk, then of course I can use and get involved in this trade. It's within my risk parameters. But remember, one thing that we're looking to do here at Master Markets is quantify absolutely everything. Now, of course, over the 25,000 people plus we've coached in this space, we've found that it's very important if you want to build reproducible, constantly scaling systems that you can scale, you can reproduce, you can profit from in a larger way, use a larger account with. You need to quantify your trading parameters, and that's why we quantify maximum risk. So it's certainly one way in which you can use the ATR 10. Another way you can use the ATR 10 is just to assess if the market is becoming more or less volatile. How do I mean that? Let's quantify that all. So this could all be associated with volatility. Why? Because if the curve on the ATR starts to dip, and of course if it starts to go down, you can find an average for it. Let's say you find that the current ATR is 63 pips, and let's say that's your mean, that's the average. If it dips well below that, then you'll know that the bars, the volatility has started to shrink. And that's another way you can also assess and use that as well. We have many more applications for the ATR, of course, in the Vedanta Elite space as well, where we actually use it even to trail our stop loss as well. So there are very smart ways that you can use that to do that if you understand bar formation at that level. But of course, this is covered a lot in Elite Coaching. So that's pretty much it from me for this market update. It's a sweet and short one. But of course, we'll look forward to connecting to you all very soon. For those of you coming on the Traders Toolbox course, advanced course tomorrow in London, Battersea, in the Crown Plaza, with a beautiful room waiting for you. Look forward to seeing you all then. For those of you connecting with us online on the YouTube channels, please leave us any comments, questions below in the chat. Be very happy to connect with you there. Until the next time, stay disciplined, follow your trading plan, and keep trading like a master. Bye for now.